There's been a massive wave of financial and real estate news recently, and if you're an investor or just keeping an eye on the housing market, you'll want to hear this. Mortgage rates have hit a 3-month low, major economic shifts are happening, and new policies are shaking up the investment landscape. But I get it. Staying on top of all this takes time. That's why in today's episode, I'll break it all down for you, explaining what's happening and what it means for your investments. Let's dive in. Hey everyone, welcome back to Rich Mindset Hub, your go-to source for real estate, market trends, and smart investing insights. Over the past few weeks, we've seen major movements in the economy, mortgage rates dropping, consumer confidence shifting, and big government policy changes that could impact investors like you. While not everything directly ties to housing, these factors play a huge role in shaping the real estate market. Today, I'll be giving you a full rundown of what's going on and what you should be paying attention to. Let's start with what's grabbing everyone's attention: mortgage rates. Right now, rates have dropped to their lowest point in 3 months. If you've been tracking the market, you'll know that mortgage rates have been on a roller coaster ride over the past couple of years. Since September 2024, they've fluctuated due to Federal Reserve policies and economic uncertainty. Last year, we saw rates dip close to 6% before climbing again in early 2025, peaking at 7.25% in January. But now we're seeing some relief as rates have fallen to around 6.75%. This dip might not be as low as many had hoped, but it signals positive momentum. Mortgage rates are a key factor in affordability, determining how easily the average person can buy a home. Understanding why these rates fluctuate can help investors and homebuyers make informed decisions. Mortgage rates don't just move randomly, they are influenced by key economic factors like inflation, recession fears, and government policies. The Federal Reserve plays a role, but rates are more closely tied to the 10-year Treasury yield. When inflation fears rise, bond yields increase, pushing mortgage rates up. On the other hand, when recession fears take over, investors move their money into safe assets like bonds, which lowers yields and brings mortgage rates down. For most of early 2025, inflation concerns were the dominant force pushing rates higher. Inflation indicators like the Consumer Price Index, CPI, and the Personal Consumption Expenditures, PCE Index, showed a slight increase after months of decline, making investors nervous. However, recent data suggests that inflation might be stabilizing, which is why we're now seeing mortgage rates ease. Another major factor affecting the market is the recent wave of tariffs. Tariffs can lead to inflation because they increase the cost of imported goods, which can then be passed on to consumers. In the past few weeks, we've seen new 10% tariffs on goods from China, and more are expected to follow. While this doesn't directly impact real estate, it does influence the broader economy, potentially leading to higher costs and affecting consumer spending power. Additionally, federal job cuts and policy shifts are impacting investor sentiment. The combination of economic uncertainty and shifting regulations can create volatility in the market. But for savvy investors, these moments also bring opportunity. Staying informed and knowing when to act is key to making the right investment moves. So, what does all of this mean for real estate investors? If you're looking to buy property, the drop in mortgage rates could be a great opportunity to lock in better financing. However, with ongoing economic shifts, it's essential to keep an eye on key indicators like inflation, employment rates, and Federal Reserve decisions. For those holding rental properties, these changes could influence demand and pricing. Lower mortgage rates may encourage more people to buy instead of rent, but economic uncertainty could also push people toward renting as they wait to see how the market unfolds. Smart investors will watch these trends closely to position themselves for success. The real estate market is always changing, and staying informed is your best tool for making smart investment decisions. Mortgage rates are on a downward trend for now, but economic shifts could change the landscape again soon. Keep an eye on inflation, government policies, and market movements to stay ahead. If you found this video helpful, make sure to hit that like button and subscribe to Rich Mindset Hub for more real estate and investing insights. Drop a comment below. Do you think mortgage rates will keep falling, or are we in for another spike? Let's discuss.